I do think it's likely going to be a good quarter, not necessarily because I'm saying, okay, because September was good, I think it's going to happen. It's more like when I look at a combination of things. So some of the paper Bitcoin summer stuff as kind of reset, froth got, air let out of the balloon, whatever analogy you want to use. One of the indicators I look at, again, there's no perfect indicator, but one of the ones I look at is on chain, market value of Bitcoin, so the whole kind of market capitalization compared to on chain cost basis. Which isn't a perfect encapsulation of things, but it is a useful signal. And when that ratio gets really high, so when market value is really high compared to cost basis, it tends to trigger more profit taking. The market, the cost base has to catch up for a period of time.
Hey guys, welcome to Everyday Finance. Although price declines can cause fear, they conceal the truth, which is that Bitcoin is increasing pressure rather than collapsing. Volatility is the indication preceding a significant move, not a sign of failure. Lyn Alden reminds everyone that Bitcoin is doing exactly as planned, despite the fact that critics jump in at every downturn, ready to declare the end. Because she sees what other people miss, she has witnessed horrific crashes vanish overnight without losing faith. The ignorant presume weakness when Bitcoin falters and gold shines. In contrast, Lyn Alden observes a system coiling, tightening, and getting ready to be released. Bitcoin is prepared to reinvent the market, not responding to it. Its movements are intended to expose truth through the cacophony, not to calm or soothe. And Lyn Alden thinks that truth is about to burst onto the world scene as the year comes to an end. The wave of Bitcoin is approaching.
Yeah, so there's different ways you can look at. So cost basis of an asset overall is basically what price did people buy into that asset. So if you bought your house at a certain price, then regardless of what it is now, you have a cost basis. Same thing if you buy a stock and it either goes down or goes up, you've got a cost base. That's your entry point. And of course, if you have multiple entry points, you can average them together in that weighted way and get your average cost basis. And when we look at basically market capitalization can be a little bit misleading. Sometimes I use the analogy of a street with houses because it provides a somewhat illiquid example. So if you have a street with 20 houses, they're all $500,000 each, and they haven't traded hands in a while. And one of those neighbors finally sells their house for 600,000. They've sold at 100,000 gain compared to the prior kind of assessed market value. And what will generally happen is all the houses on the street will kind of re-rate higher because now there's a fresh new data point for what houses on the street are worth. In this example, we're assuming they're practically identical. So even though a fairly small amount of capital changed hands, a $600,000 buyer came in and the existing holder sold, if every house on the street goes up by $100,000, that's a $2 million market gain for that street of houses.
Right.
And that, to a less extreme effect, happens in Bitcoin, which is if you've got pretty tightly held supply, kind of all the fast money's gotten out. What's left is kind of held by pretty diamond-handed people and entities, and then for whatever reason there's an influx of new demand. A fairly small amount of income and capital can have a 5x multiple, for example, on market cap because a fairly small number of coins are trading hand. And when we do market cap, we're just saying, well, what's the current price of a coin multiplied by all the number of coins that exist.
Right.
But that's not necessarily the price that it would take to actually, if you want to buy more of them, the price is going to go pretty rapidly. And so whenever market cap gets kind of really ahead of itself, it can be a little bit of a warning sign. So historically, the 4-year cycles of Bitcoin ended with extremely high multiples. That level of euphoria is kind of off the charts.
Yeah.
Another way of putting it is that, going back to the house example, if that one house trades hands and all those houses are now assumed to be $600,000 houses, that's kind of a fragile assumption. It says, okay, this one traded hands for that much. But if 4 more neighbors all say, oh, our house is up now, we want to sell, you might not necessarily get 4 buyers in that street for 600,000. So, but after, maybe after 6 months or 12 months, if there's another data point that's at 600,000 and maybe another data point slightly under, another data point at 650,000, whatever the case may be, it starts to lock in the view that basically this is now the true new market price of the street, at least currently. And the average cost basis is rising because in that one example where the one house trades hand, the cost basis of the street has barely changed. So it used to be the cost basis was 500,000 per house. Let's say one house traded hands for 600,000, so you added 100,000 to the total cost basis of that whole street. But as you get two houses, three houses, four houses changing hands, you're starting to inch up the average cost basis of that street, the actual amount of capital put in as entry prices. And
Mm,
that's kind of, it's psychologically important for investors,
yeah.
the price that they entered. And in Bitcoin's case, we, of course, data is a lot harder to come by than a 20 house street, because we don't know exactly what, the volume of exchanges. A lot of it's self-reported. Some of them are publicly traded, so the numbers are more serious. But we don't know the exact volume of exchanges. We don't know every price that everything traded hands at. So, but one of the data points we do have is when coins moved on chain, what price were they at when they moved? And one of the biggest sources of moved coins is coins going to exchanges or from
Mhm.
exchanges. And generally speaking, the moment at which people pull coins from an exchange into their wallet, that's a pretty psychologically important number.
Yeah.
That's like a type of cost base. Even it's not necessarily the price that they bought at, it's the price that they made a hodl decision at. And that's the
Yes.
data that we have is kind of just locked in there. And so I do look at the kind of the multiple. So generally speaking, when the market cap gets a little frothy compared to the cost basis, either you're more likely to kind of tread sideways in market cap and cost basis will inch up as more trading happens at that new higher level,
Yeah.
or sometimes the opposite happens and market cap falls quite a bit and kind of catches down if it was kind of a brief uh, period of euphoria. It's a little skewed by the fact that Bitcoin has had a handful of like 4-year cycle, ridiculously good fourth quarters.
Mhm.
So some of those numbers are insane, and then that can overall skew the whole data set. Um, but so I kind of don't put a ton of weight into that, even if for separate reasons I lean toward this next quarter being probably pretty favorable. I don't really specialize in 3-month predictions,
Mhm.
but overall, I do think it's likely going to be a good quarter. Not necessarily because I'm saying, okay, because September was good, I think it's going to happen. It's more like when I look at a combination of things. So some of the paper Bitcoin summer stuff as kind of reset, froth got, air let out of the balloon, whatever analogy you want to use. One of the indicators I look at, again, there's no perfect indicator, but one of the ones I look at is on chain, like so market value of Bitcoin, so the whole kind of market capitalization compared to on chain cost basis. Which isn't a perfect encapsulation of things, but it is a useful signal. And when that ratio gets really high, so when market value is really high compared to cost basis, it tends to trigger more profit taking. The market, the kind of the cost base has to catch up for a period of time.
Bitcoin is advancing ahead of instability rather than responding to it. Bitcoin turns into the silent mirror. That reflects what's actually going on behind the surface. When world powers clash and political narratives change, this volatility is not typical. Rather, it is an indication that the established financial system is collapsing. For the first time, people have a say in the direction of the next period. Gold had an opportunity, but failed. The escape route is Bitcoin. The opinion claims that a significant worldwide repricing is under progress, and that the conventional 4-year cycle is over. Governments continue to generate currency and narratives, but Bitcoin is becoming a global asset. Institutions recognize that as well. JP Morgan's decision to accept Bitcoin as collateral is a significant change. This is a structural shift in the economy, not just a fad. In addition to surviving, Bitcoin is establishing itself as the foundation of the future as fiat systems falter and global tensions increase.
Potentially. I think over time that signal could lose some of its value. I don't think that's the case yet because I mean there's always been a history of like the number of coins that were in Mt. Gox at the peak,
Yeah.
the number of coins, that were in Binance, the ratio of coins. So these things have always been somewhat concentrated and even like GBTC, people talk about MicroStrategy getting a lot of coins or BlackRock getting a lot of coins and all these ETFs. I mean, GBTC had well over 600,000 coins before ETFs were even launched and before MicroStrategy got anywhere near as big as they currently are. And so while it is true that more coins have ended up in ETFs and Bitcoin treasuries like MicroStrategy or MetaPlanet, it's we're not starting from zero. We're basically starting from whatever GBTC was, over 600,000. So if the number is twice that, you've added 600,000 coins to those pools, and some of that's, not all that's say from self-custody. Some of that is from coins that would historically sit on exchanges, or sit in a little bit more cold storage parts of exchanges, or institutional things like that. So I wouldn't say it has a massive effect so far on the data compared to prior history, but over time, it certainly could. I think a lot of it was theater, but it's not equally from every participant. For example, it's possible that Musk thought something that's different than what others in the administration thought. They're not all one mind. Like any king's court has multiple factions in it, and presidential administrations are no different. Um, like in this case, there was kind of the pro-tariff faction, and there's like the little more free trade faction, which Musk would have been more aligned with. Um, I think the part where I call it theater is that this was obvious in advance, I would argue. And as proof of that, I mean, Callahan and I put out a report. So he wrote it, I advised it, and commissioned it on my website. It was started to be worked on in 2024. It was published, I believe, in January 2025. So the beginning
Yeah.
of all this, explaining essentially why nothing stops a train, but in particular, there's a really
Mhm.
big section outlining in detail why Doge is very unlikely to have like material macro effects. Not to say that they can't gut program XYZ or do that, but it's like when we're talking numbers. So we quoted, I mean, they were talking about cutting $1 trillion from the deficit within a year or so. I mean, the initial headlines are basically getting rid of the deficit, so 2 trillion. But then they quickly said, okay, $1 trillion, and we were like, here's why that number is not going to work. So it's not that those effects were undone; it's that those effects were never going after the core issues to begin with, which is if you look at the pie chart of government spending, it's like a really big chunk is Social Security. Another really big chunk is Medicare. Another really big chunk is Department of Defense and veterans benefits, and another really big chunk is interest expense. And those are the things that are either impossible or extremely politically or voter-wise unpopular to cut. The part that they were going after is like the 15% of the pie chart that is like everything else,
Yeah.
the transportation, parks, Department of Education, and like say what you will about those, it's a much smaller part. And those big ones, except for the DoD, like interest expense, Social Security, Medicare, they're not employee heavy areas. They're transfer payments. They're huge monies going around with a tiny fraction of the government employees. And most of the employees work in that other tiny, spending amount, like the FAA or the uh, park and recreation, all that stuff. That's all the employee heavy stuff, but actually ironically smaller spending areas. And so we were like, look, what they're talking about, what they're actually going after is pennies on the dollar. Because they're not going after the core things, nothing stops this train. And then we saw the big beautiful bill came around and just kept the train going. And so where I think it's somewhat theater is that instead of acknowledging on Musk's part that hey, we actually never really had a chance, we were going after the wrong thing to begin with, that would look awful. Instead, someone else has to be at fault. And it's like, well, we were doing this, and it would have worked, but you got in my way, or XYZ happened. Whereas I argue, no, you were actually not even ever going after the core issue. And then an underlying point, and this happens frequently, is that when difficult decisions have to be made, in politicians will often, and this happens both on the right and the left, is pretend that there's no loser from this, or that the loser is so small and unimportant that it won't matter. And there's a couple ways to do that. One is the grow your way out of it conception,
Yeah.
which, and again, these things work because they have a grain of truth in it. But then it's like, so yes, growth matters, but the idea is that, well, we have high debt, we can just grow out of it. But generally speaking, whoever's holding those bonds and currency is still getting debased compared to whatever you're growing into. And so for example, often when you see unfunded tax cuts, so they'll cut taxes without cutting corresponding spending, and the argument is, well, we're not really just accelerating the deficit because we're going to get some growth figure that's going to make this all okay, and you never really get amount of growth, so you end up contributing to the total debt. So that's one, and then two, let's say you want to cut spending, and you say, but if you tell voters we're going to cut all the things you care about, like good luck, right? I mean, if you look at Social Security, Medicare, I mean, the especially the seniors are the ones that vote, um, and they're third rails for a reason, kind of. I mean, the 2010s Paul Ryan era, the Republican Party, they gave it a pretty solid shot to try to trim some of this. Never really had enough consensus to do it. The current version of the Republican Party, the Trumpian part of it, is less fiscally conservative, than the 2010s version of the party. They kind of acknowledge these are third rails. Um, and so instead, the narrative among politicians is basically that there are areas of such vast waste that we can cut, and apart from a handful of special interests, it'll be like painless. And the problem is, like again, that's the tiny part of the pie chart. You actually can't do massive cuts unless you're after the really big things, which are either popular among voters, or I would say the biggest area that they could have gone after is Department of Defense. That's the one giant area where there actually is a lot of employees, a lot of spending, and that's the classic thing of like the Pentagon never passes an audit, despite all the money going there. Now the problem there is less voters and more politicians and lobbyists because every member of Congress that has something defense related in their precinct, which is a really big share of them, will generally defend that thing in their precinct, because that indirectly that's voters. That's especially like very economic workers. They say,
Yeah.
no, we don't want to cut this program. Maybe you're making tanks that don't even matter anymore, like a certain type of tank that generals say I don't think we need that tank anymore, and then but the congressperson is still going to defend that tank being made in their precinct because it's jobs and it's whatever contractor might be involved in all this. So
Yeah.
going after that is like hard mode. And that was the part that they maybe could have applied more pressure to, and it made a little bit of a dent, but they didn't really even do that. So I think the Doge thing was kind of dead on arrival. And then the second thing is tariffs, which has made more of a dent. And that's why I've actually followed that closer, because that is more macro impactful than Doge, which is mostly non-existent.
Bitcoin is already outpacing the Federal Reserve and isn't waiting for it. Bitcoin is quietly absorbing macro signals and preparing for the next big move as it hovers around $19,000 as the Fed gets ready to cut rates and contemplates halting quantitative tightening. Although traders closely follow Jerome Powell's every utterance, the market is actually pricing in something much more significant: the gradual, unavoidable strain of a monetary system that has been overextended. With almost $200 million coming into Bitcoin ETFs in a single day, institutional inflows are still on the rise, demonstrating that money is shifting from conventional safe havens to digital hardness. According to Lyn Alden, Bitcoin is no longer defined by the previous 4-year cycle. The actuality of financial collapse is what counts at this point. The US's fiscal domination, warfare spending, inflationary pressures have made Bitcoin the most obvious example of this change. It is a standard unaffected by political rhetoric or central bank showmanship because of its fixed supply, worldwide ownership, and resistance to manipulation. Policymakers create narratives, while Bitcoin is just value, unadulterated, and pure. Bitcoin is spearheading the shift, and the current upswing is more than just a rally, it's a representation of the future.